It took me a second, but I figured out what's going on in gold. In today's show, we gotta talk about gold. We gotta talk about the dollar because there might be a big move coming. We gotta talk about investment strategy for gold, therefore for silver and for the mining stocks. And oh, bonus, I'm gonna give you my favorite swing trade for a gold miner right now. This is a really important show if you're investing in gold, silver, or the precious metals miners. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hello from Florida, from the Rig Rule Symposium. Well, you know this guy, a legend, one of the best commodity traders of all time. Well, and the other guy in the blue shirt, that's Rick Rule. Oh, special shout out is in order for Justin, probably the youngest viewer, 16 years old, already active in the market. So impressive. And shout out also to his dad, Daniel, who, wow, great job of parenting, getting your son interested in the capital markets at such a young age. And he's so advanced. Justin, you really impressed me. You are doing great. Stay the course. You'll be rich. Fantastic job by Daniel. And I was really happy to meet both of you. And by the way, I know it looks kind of weird here on the picture. The hand on Daniel's shoulder, that is not my arm. All right. I'm not that plastic guy from the Fantastic Four. Okay. With that, let's jump right into gold because we got a lot to talk about. So on Thursday, gold went up and it surprised people. And I figured out what's going on. And this is, you might say, well, it's just a candle. It's just a daily candle. I look at the past weeks. We go up, we go down. No big deal. No. What you're going to hear now, that is a big deal. So first things first, we're going to start with the technicals. And we see we really got the zone around 4,070 correct, because as you can see, it held on Wednesday. We opened on it on Thursday, yesterday, undercut it for a second, and then went straight up. So this is an important line. It held, it got the buying. That is the technical part that led to the strong Thursday. But what is really important is what gold is doing and what the dollar is doing. And again, took me a second to put one and one together. Can't be smart and good looking at the same time. My girlfriend would probably say I'm neither. Fair enough. Next Tuesday, the new CPI inflation numbers come out. The market, according to my sources, is anticipating and positioned for 2 rate hikes in the next year. However, what happened to oil, which is a major component for the CPI in the month of June? Well, this year's the beginning of June, and you see we took a big nosedive, and we compare it to the prices in May and in April. It is reasonable, even probable to assume inflation numbers going to come in lower, which will therefore decrease the chances of interest rate hikes, which the new Fed chef doesn't want to do anyway. But the market is not positioned for it. Now, let's take a look at the dollar. And again, this is why I always say intermarket analysis, really important. Charts alone from one single component, may it be gold or oil, doesn't tell you the full story. Now we are looking at the dollar here. Now we're starting to understand the weakness in the dollar. The FX markets, who are the best traders when it comes to macro, they are sniffing out the CPI story, the inflation story, and they're positioning themselves, meaning they're saying, well, probably not going to be 2 rate cuts that the market is pricing in right now, which would therefore lead to a weaker dollar. Fair enough. But here is the big thing. Look at the trend line and look at the brown 20-day moving average that right now, and again, the candle that you see, the red candle that you see here, that is today's trading. So we have to wait how this closes, but we might close below the 20. And this is significant because as you can see, when we jumped over the 20, it held here, it held here. The 20-day was what pushed up the Dixie in this up move, which on the other hand was one of the reasons why the gold price went down. Now, we might break the 20 and we might break the uptrend. What does that mean? That'll mean short-term, big-time sell-off in the dollar. What does that mean for gold? Aha! Chances are increasing then that gold would jump up because we have the negative correlation. And again, it's the narrative, right? This was one of the main things that I was talking about to a lot of the subscribers that I met at the Rules Symposium, which, man, that is really the place to be. If you are not here, maybe next year, little Florida trip might be a good idea. Dollar falling down because there'll probably be less rate hikes. Yeah, that is the narrative that the market wants for gold. Now, we look at the gold chart right here and you can see we are not missing much in order to jump above the 20, which I don't think is as important as other people say. But again, that is the first indicator that things are changing. You can already see that the 20-day moving average, the brown line, it's kind of flattening out, right? See how dynamic it went down here, and now it's kind of flattening out. That's already a good sign. Obviously, we talked about, look at the massive positive RSI divergence. We already talked about in a previous video. If you missed that, hit the subscribe button, because these are the type of things you need to know to be way ahead of the market. Now, we jump above the 20, but even more important, and I was asked today, hey, what are the signals that I need to pay attention to really know that the sentiment in gold is changing, that the lows are in? One of them is, do we break the downtrend that has been in place since March? This is a biggie. Look how often we doinked. We doinked off here, we doinked off here, we doinked off here, we doinked off it on Monday, most recently. We jump over it and close above it and confirm. If you want to be a fast second, that is your signal, because if we jump above it and close, we will likely also close above 4,215, and we know that is the big one. Why is this? If we close above 4,215, we are making a higher high. And now we have a low, a higher low, a higher high, and another higher high. And that, ladies and gentlemen, is the first indication that the low is in. Because as you can see, if we go back and look at the history of this correction, this hasn't happened much. Here, low, this was the up move, here's the high. Higher low, good, not a higher high. Right? Same here. Low, high, lower low, lower high. Not interested. So this is the sign of a change of trend. So if you want to be a fast second, what is a fast second? As I said, we're going to talk about strategy, which again is really important now because there are going to be a lot of people that are going to miss the boat. Fast second means you're not trying to time the perfect low, which you're not going to hit anyway. Okay? But you want to get in fast when you see that the technicals tell us that the probability that this is really the bottom is increasing. And it is more probable than not that this is indeed the low. This meaning 4,000. So this meaning this right here, what we saw in the last week of June would be the absolute low, right? And we are not going to get, and this is important, we're not going to get the undercut, the liquidity grab that I've been talking about that I would like to see. And I talked to several of you guys here at the Rules Symposium, and you guys said the same thing. You're like, yeah, this is what I think is going to happen. This is what I want to happen because I want to buy. And I said, yes, I agree. That's what I want to see as well. That's what usually happens. But what is your strategy if it's not happening? What is your strategy if all the sellers are out already? If these past 5 months, especially what has happened, right, in April, May, June, this part here, because remember, think back, right? Yeah, we had a nasty March, but we doinked off the 200 here, and as you can see, sentiment was still all right. We're still going up for quite a while. And then if you look at the time that we spent in the uptrend, it got shorter and shorter and shorter. So sentiment was still okay here, but then these past like 2 months that really broke people. And maybe that was the time that got out all the sellers. Maybe all the weekends are gone already. And also, clearly, if we look at what's happening under 4K, and let me zoom in for you here real quick. Look at these long tails. So we tried to break down. They tried to push gold down. And every time someone came in with the big time vacuum cleaner and just swiffered it all up, bought up all the gold under 4K. 4 times they tried to push it down in a negative sentiment. Didn't work. Now I'm asking you, who brought in the big Swiffer vacuum? If you say that's probably a big central bank that does some strategic buying because they don't care if they're going to buy at 4K or 3.8 or 3.7, I say that's probably a really good guess. But that also means that there's someone with very deep pockets waiting below 4K to gobble up all the gold that the weekends are selling, which again, supporting the thesis that the low is in. And now, what do we do? That's the strategy. What do we do now if we don't get the undercut? If this is indeed the low and we are forming the structure that we want to see. And if we look back, we can see, okay, really, if we include these lows for the past month, we are kind of building out structure, especially if we get back above 4,215. Now, this is really, really interesting. And we could get major support from the dollar if the dollar breaks below this uptrend, confirms the break of the 20-day, that would support gold. So what does that mean for us? That means if you have not bought, if you're 100% in cash with the cash that you want to allocate for gold and your gold miners, I don't think you should wait. I mean, I'm not your financial advisor, you know. Come on, I'm the schnitzel guy. What do I know? You make your own decision with your money. But I'm buying today because things are heating up. And on Tuesday, if CPI comes in and it's not hot, we could see the dollar going down. If it's not already going down in anticipation, and therefore we could see gold jump up. And then you don't want to be the guy who's not invested at all. What do you want to buy? There are three categories that you want to buy. You want to buy the producers. You want to buy the popular stocks, which ideally go hand in hand. A good example, if you're here at the Rules Symposium, you know it yourself, is, for example, Aya Gold and Silver. Fan favorite here on the channel of me, you know this. And you want to buy the stocks, the mining stocks that are showing great trading setups and high relative strength. Because those are the ones that in this first phase of the bottoming of gold and the gold miners, they're going to go first because they're the strongest. Because people are going to be still uncertain, is this really the bottom? I don't know. So what are they going to allocate? They're not going to buy some junior explorers. These guys might move a little bit, but their time is going to be later. They going to focus on the mining stocks that have high relative strength. And here is my favorite swing trade, which is exactly that setup that I told you about. Look at Montage Gold. I mean, this is borderline ridiculous. We are right where we were in January. Stock made new all-time high, middle of June. Remember where the gold price is? If you went to Ibiza and partied for 5 nights and didn't sleep, and then came back and looked just at Montage Gold, you would be like, yeah, gold is going to be at 5,500. Where else would it be if I look at this chart of this gold stock? Incredible relative strength. Above the 200, not that many mining stocks above the 200. Above the 50-day, even less above the 50. It's above the 20-day. Wow, very few stocks. It is making higher lows since March. How many mining stocks are doing this? And now let's go back in history. Look at this setup of higher lows and this resistance zone, and then we break out. And I'm going to take off the 50 and the 20, and just because to make things a little more better for you guys to see. And now we're going to go back in history. Look at this. This exact setup happened twice in 2024 and 2025. Look what happened in 2024. Major rally, bottoming phase, then it started to make higher lows. Here's the resistance zone. We broke above it. Monster move up. Led to the exact same setup. Again, consolidation. This is not even a correction. This is a consolidation, right? Higher lows, resistance zone. Took a hot minute, right? Doink, 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 doink. We break out. Monster rally. Now, to be fair, right, we cannot expect a rally like this because obviously we know, let's say up to the fall, right? This was when gold just was going up and wouldn't stop. But we can expect this. We can expect this if we break out of this exact same setup. So if you want to do a swing trade long, and again, I'm not saying you should do this, but man, this is a great setup. You put your put buys right here, 1750. This is one of these stocks that will go, especially if gold breaks out. So that is it. It is important to understand that there are big developments happening with the dollar, with the market maybe being forced to readjust its anticipation of the rate hikes, and that could be the tailwind for the gold price that would complete the structure that we want for the bottoming process. And think about it. Everybody was talking about either the undercut, like me, or 3,500, maybe 3,600. That's where all the buying orders are. What have I been telling you? The market usually will choose the road of the highest amount of pain. The highest amount of pain is, this was it, 4K. And now we're consolidating, building a nice long-term. I'm not saying we're going to go back to 5,000 right away. That is unreasonable to expect, right? But building out structure here, and then step by step breaking the downtrend, getting back above 4,215, right? Step by step, improving the technicals, making the situation better on the longer time frames, and then we won't be able, unless we get a major correction in the equity markets, which would probably pull down the mining stocks if gold and silver are not going up significantly. If that is not happening, then the prices that we see with the miners right now, probably going to be the best buying opportunities for us. So that's why we need to adjust. That's why we need to be flexible with our strategy. I personally, as I said, if you see me today at the Rules Symposium and I'll be on my laptop just typing away like a crazy person, that's what it is. I'm typing in some buy orders. And I'm going to purchase exactly what I just told you. Producer's going to go first. Relative strength going to go first. Popular, momentum, quality mining stocks that are popular. This is important. They're popular not with the tourists, right? What are the tourists? I call the regular retail investor that jumps on the silver miners when silver is at 105 and gold is at 5,200. Those are the tourists, right? They're like tourists. They visit the gold market and the silver market for a while, and then they're like, "Ooh, I heard about that Nvidia island. I'm gonna swim over there." So not the popular ones with the tourists, the popular ones with us, the people that are deep in the commodity sector. Let's say, for example, if we talk silver, Abra Silver is such a stock, right? The tourists have never even heard about Abra Silver. But for the people in the commodity sector, that is one of the really popular momentum stocks. So that's it for today. Tomorrow, as you know, high dividend winners. This is going to be a doozy. I'm telling you, this is a story that you don't want to miss if you like to invest in commodities and you like money like I do in form of high yield dividends. If you enjoyed today's show, if it brought you a little bit of value, hopefully it did, hit the subscribe button. We see us tomorrow. If not, have a great weekend. Bye-bye.